at least not in this session, in the smaller ones. Do you want to give a chance to do so? If
we can try, yeah. Okay. If we have like 5 minutes, definitely we can try. And you have time. I mean, it's 4:30.
It's 4:30.
4:30. You have 45 minutes.
Okay.
Okay.
No problem.
All right, great. Thank you to those patiently waiting for the panel to start. Okay. So this panel will look into the intersection of trade and fintech. We've spoken about the AfCFTA and PAPSS earlier on and the potential it will give the continent. So we will examine the intersection of trade and fintech and all the opportunities that they are for Africa. We do have another session in the breakout room about the confluence of fintech, Web3, and the metaverse for whoever is here and interested in listening to this. But this is it, so I will give the floor to Marvin Cole, the co-founder and CEO of Ovamba Solutions. Welcome, Marvin.
Thank you.
And joining Marvin today will be Tesh Mbaabu, co-founder and CEO of MarketForce, Zach Bijesse, co-founder and CEO of Payhippo, Hio Sola-Usidame, co-founder and CEO of Oneport 365, John Bosco Sebabi, Deputy CEO of PAPSS, and Akinyinka Akintunde, COO of Afex Nigeria. Thank you very much.
Fantastic. Good day, everyone, those here in the audience and those at home. This is going to be a very exciting panel for those who know trade and Africa really well. Trade powers the African economies, SMEs, and much of the employment. We have experts here from all across Africa, so I'm looking forward to some great answers and a lot of value for those who participate. So let's just start with some context. The post-COVID, intra-African trade has actually fallen quite significantly. In 2015, all African trade was around 21% of intra-African trade. It's now fallen this year to around 13 to 14%. I'd love to get some perspectives on why I think that may be, even though we have the Africa Free Trade Agreement, and give people a chance to opine a bit, and then give you a chance to also introduce yourselves as you opine. So give each person a chance to speak a bit. Let's start from the far side and then come across.
All right. Thank you very much, Marv. Akinyinka Akintunde is my name. I work with Afex, and the core what we do is facilitate trades between producers of commodities and the consumers of these commodities. I'm a fan of infrastructure, and I believe that any technological solution, be it fintech or whatever, must rely on a very, very solid infrastructural base. COVID made it clear that there's a gap in terms of infrastructural requirements across Africa. And a lot of articles has been out there in terms of the deficits we have in this infrastructure. So yes, we might have the free trade, Continental free trade agreements in place, but if we don't fix the infrastructural gap in the ecosystem, we will not see much improvement there. And this infrastructural gap includes a lot from logistics infrastructure, warehouses, roads, and the likes. There are a lot of multiple taxation across the system, which doesn't encourage this, and a lot other bottlenecks across it. You'll see that some models that work in country may be difficult to replicate across borders until we fix all of this. And the more solutions we put in there, the more we can grow the ecosystem. Two options we have. The first is rely on the government to do this. Most governments across Africa are already cash-strapped, battling with high inflation, instability in the FX policies, or as the case might be. And the second option is leave it to the private sector, who has the structure and the manpower requirements to be able to put this to completion. And the gap for that has always been ability to access the required finance to drive this. So putting that in place and relying on the private sector will go a long way in increasing the volume of intra-Africa trade.
Thank you. John?
Thank you, Marvin. My name is John Bosco Sebabi. I'm the Deputy CEO for PAPSS. PAPSS is a financial market infrastructure to carry out cross-border payments. If I can just take a little bit, just 2 steps back and look at what are the challenges of intra-African trade. Even before COVID, let's look at what it was before. At 21% where it was before COVID and at 16%, it is still very low. When you look at intra-Europe trade is at over 75%, intra-Asia is over 65%, intra-American so high. So still whether 21% or 16%, that was low. And because of a couple of challenges. Yes, of course, my colleague mentioned about the infrastructure, roads, airports, that's fine. But also we have other soft issues. For instance, an efficient payment system across borders, KYC compliance issues, regulatory issues. So these are soft kind of approaches, challenges that do exist. And maybe I can also take a step back and maybe come in front a bit and discuss what the AfCFTA is there to do, which was signed in 2019 to increase intra-African trade. There are a couple of pillars they're dealing with, like rules of origin, they're dealing with that, shared use of taxes and stuff like that, and also looking at the non-tariff barriers. And in the advent of that, Afreximbank came up with a program to increase intra-African trade because these 2 institutions, African Export-Import Bank and AfCFTA, are mandated to do the same. They're like twins born in different dates. So they're going to do the same thing. Now, what has Afreximbank done in terms of reducing or managing those challenges? That means the cross-border payment system, the regulatory issues, the compliance to KYC. We've set up something called the African Trade Gateway, which has it's like a one-stop point for digital platform. So a kind of one point of entry, whereby we have projects like Mansa, that's a KYC and due diligence platform. We have the trade regulatory platform where you can go into the portal and then you get to see the regulatory issues everywhere, the requirements for investment, for trading, and also the trade information portal where you can get trade information. Because also lack of information, trade information, and market information is a big challenge to trade as well. So, and now we look at the overarching challenge, which is sending payments across borders, which is what PAPSS is dealing with, whereby PAPSS is a system that offers payments in local currencies and instantly, and also at a low cost. These are the biggest challenges in terms of sending payments across. So this is how I can sum up the challenges of trade, intra-African trade.
Thank you for that. So we've gotten the hard challenges, the soft challenges. It's going to get more difficult as it goes. Please.
Awesome. Thanks for that. So my name is Sola-Usidame. I'm a co-founder at Oneport 365. At Oneport 365, we're a digital freight forwarder, so we deal with cross-border trade on a day-to-day basis in Africa. And I'll take on the points that's been earlier listed in terms of infrastructure challenges, and that's probably the #1 key factor. But what I also want to highlight as a second major factor is the fact that in terms of trade routes and logistics within Africa, it's still a major challenge. What do I mean by that? We constantly get requests for bookings within, movement of cargo, let's say 1,000 tons of ginger, let's say from Lagos to Port of Mombasa. Now, the typical trade routes from Africa have always centered and factored around the movement of cargo from Africa, which is how, in most cases, has been raw materials, to Europe for processing, right? And then return to Africa.
That's finished products. Yeah.
Right, okay. So I'll give you an example. Recently, we got a request to move cargo to Bujumbura, which is in Burundi. Now, what you have is a situation whereby the cargo has to go to Europe, right? Stays in Europe for about 3 weeks, right? Then a vessel takes it to the port of Mombasa, and then from the port of Mombasa, you have to truck it to Burundi, right? I can get it from China at half that time, potentially, right?
Yeah.
So we need to ensure that actually there's a system that enables movement of cargo within Africa. There has to be fixation, well, there has to be a massive fix when it comes to the trade routes within Africa. And also government policies also need to help to a large extent, right? So you look at West Africa, for example, to a large extent over the last 3-4 years, most of the borders have been closed. So you're moving cargo, let's say, from Lagos to Accra, right? And then you get to, I think, Togo or something, and the border is closed. So what does that mean? You have to get on a vessel. Well, this is a trip that's about 1,000 kilometers and all of that. So there's the infrastructure challenge, but also there has to be a system that enables either new shipping lines or new infrastructure providers to provide trade routes within Africa, West Africa to East Africa, West Africa to South Africa, that sort of system. I think that will go a long way.
That's a very interesting point. Thank you so much for that. Mr. Tesh, your turn.
Yeah, hey, thanks for having me. My name is Tesh, co-founder and CEO at MarketForce. We're a B2B commerce platform, so we're enabling consumer brands, a lot of these large companies, be able to distribute their services to last mile consumers on the continent, and how they do that is by leveraging informal merchants. So 90% of consumer purchasing happens through informal merchants, mom and pop stores. And the big challenge we see in terms of intra-Africa trade is you have a lot of small, medium-sized businesses trying to break into manufacturing and distribution, but there's so much fragmentation, and they lack the ability to build or grow large businesses and be able to export. So you're seeing a lot of products that are being sold to our consumers are imported. Yet Africa is so rich as a continent. So I think just being able to support our local businesses, through digitization, access to working capital, so that they're able to grow, and then we see more intra-Africa trade, happening as a result. Of course, with the infrastructure being made available, and then just having the actual businesses, human resources, human capital to build the businesses.
Fantastic. Thank you so much, Tesh. Yes. And last but definitely not least, Zach, you've got a spotlight now.
Thanks. I'm Zach, co-founder of Payhippo. We're building business banking for Africa. We started with a 3-hour SME loan in Nigeria, where we've done over 10,000 business loans with a repayment rate of 97%. And the reason why this is so high is that most of the businesses in Nigeria are creditworthy, but you don't know which ones are. And banks won't lend to them because there are no credit scores, because the collateral requirements are too high. And the reason why we're growing so fast as a company is because, as a team, we've seen the challenges of financing in the market. So I worked at a Fintech lender that failed to launch well in the market. My co-founder, Chioma, she worked in microfinance, saw a lot of the challenges that microfinance faces in a market like Nigeria. But our third co-founder, Uche, worked as an engineer at a digital financier in the US and saw how to build a great product. So in 2020, we built out that product in Nigeria. In 2021, we grew a lot. We raised some money. We got into Y Combinator. We raised some more money, just so we can keep building out this technology platform that ultimately helps you figure out which of these businesses is creditworthy. Our big vision is that any of the businesses in Africa that need financing can apply for us, and if they qualify, get financing, and then we can bank them and offer other services. So that's our company, and so there's a lot of overlap with the question today of intra-Africa trade, because if you look, for example, in our beachhead Nigeria, in one country, if you can't tell who's creditworthy within the country, it's hard to then support trade across border. And so we've seen the most creditworthy of our businesses start to use funding to be able to trade across border. So I'll give you an example. I won't give the business name, but we got a small business, average loan size of about $2,000. His name's Jafar. He's got 5 people on staff. He's based out of Lagos, but as you'll find with, and maybe some folks in the room are familiar with this, many businesses in Nigeria, you're based in Lagos, but you're trading across the country, sometimes cross-border as well. He sells food products to hotels. So there's a hotel, you need fish, you need like any other good, maybe some frozen goods as well, he'll sell it. I remember sitting with him a couple months ago to see how his business was doing. His highest margin product is prawn. So his prawn is so valuable for him that he needs to make sure he has a quality source of it. He actually goes across the border to Niger to go get prawn. He doesn't do it, he has his son who helps run the business, goes, purchases the prawn, and then he sets up the logistics to move it back across the country to Lagos. So a part of our financing is going toward doing that. And the only reason we're able to finance that is because of our technology that figures out, look, which of these businesses is creditworthy. Yeah, I know, exactly. In terms of coughing, it's very hard. It's a very difficult thing, but ultimately we think that by knowing who's creditworthy, you can finance within a country, but then also be supporting businesses, doing trade across borders, whether simply moving across a border or regional, like east to west, west to east, as we were talking earlier.
Excellent.
That's Payhippo.
Okay. So we've got, as you can clearly hear, a bunch of experts here with very different views of the main challenges. But let's get off some actual questions, and I'll start actually, Akinyinka. What was just mentioned was around the issue of, a small vendor that needs to now master logistics to cross the perishable product moving across border. And the issue of trust has come out from what Zach said. So I'm curious about how you think about solving the question of trust, because trust has so many different points around performance, around cultural factors, trust that things can be delivered at spec, in quality, etc., and how you think about that from perspective of actual delivery, and then we'll go from there into how you pay for it, and I'll give John a chance to talk about making sure things get paid for properly as well. So please.
Thank you. And I'll support the issue of trust with 2 key examples.
Please.
From 2 different geographies in Nigeria and in Nairobi. So one of our core business is working with farmers, right? And across Africa, farmers are very, very much on a small scale, meaning very small land cultivation, and that's what they depend on their livelihood for. Our business is structured around creating a market for them where they can easily sell their goods and get value, which is where the clearing and settlement part of it comes. When we started the business in Nigeria, and we sold the idea of storage to smallholder farmers, because the market is so trust deficit, what happens was the farmer will bring the commodity to your warehouse, and it won't leave. Right? If we were to leave, early morning the following day, he's going to come into the warehouse and spot his commodity. Even though the commodity is fungible, but he wants to stay stuck until he gets paid. That's what happened when we started in Nigeria in 2014, 2015. Recently, we started in Kenya, Eldoret, and the same scenario played out. These are huge, big farmers. Farmers in Eldoret are much more on a larger scale. And this guy came with a sizable amount of commodity, and literally, he sat outside the warehouse every day to ensure that his goods are not taken out of the warehouse until he gets value for it. And that shows that the issue of trust cuts across all regions, all geographies. And you can't earn that trust until you deliver on it, right? One of the famous words or sayings I like is, don't trust people, build processes, right? So the farmer or whoever is selling the goods on my platform doesn't trust when I tell him I'm going to pay him. What he wants is, I supplied goods to you, you pay me on the pre-agreed terms. Now, one of the ways to do that is to ensure that, firstly, realize that it's not going to be a day win. It's something that is built over time. And in the system where payment is a huge challenge, especially when you talk about regions with little or no banking facilities, where you have to rely on agency banking, which is quite huge, right? The informal economy is huge, and most of the funding here doesn't go through the banking system. And the question is, how do you ensure that you can deliver on this? And one of the things is coming up with innovative solutions. Earlier during the day, we spoke about online and offline technology, right? And one of the solutions we've come up with at Afex is building a solution in which you can get to pay the supply of the goods within 3 hours, similar to accessing loans within 3 hours. It's a nice metric, right? I think 3 sounds like a unique number, right? But to do that, you have to put a lot of things in place, right? When you have no bank, in a location where you have no bank, no internet services, then you have to see people going with cash to all those communities. A huge gap is the fact that most payment solutions that you have across Africa are in commercial areas, Lagos, Abuja, where everybody has the same solution and they have access to all of these. How do you build that? And we can't run away from doing that. We have to find a solution that works, either through agency banking or through traditional banking, where you have all this access to these payment facilities within the region. But you need to build that trust, and it's something that needs to be done over time. And the key part of it is whatever it is that is promised to be done is done, and the recipients of it see value in the process of doing that.
That's fantastic. You raised some very interesting points there, I think, and I'm sure John will have a lot to add. But let me ask you some specific questions. So with PAPSS and central banks being involved, there is no single central bank across Africa. There's no European Central Bank type equivalent. You also have policies which make trade quite difficult. Nigeria has multiple exchange rates. The CFA zones in French-speaking West Africa and Central Africa, you have difficulties getting money out of the country, and you must pay taxes and prove that you've paid your taxes before certain things happen. So I'm curious about how PAPSS is trying to solve this problem and get people to actually utilize your services versus using let's call it, the traditional methods of Hawala or other tools that have been used as other exchanges of payment, and how you also try to solve the foreign exchange challenge, because often people are pegged to the euro or they pegged to the dollar as they trade versus other African currencies. So I've given you a lot to answer, but I'm sure you've got wide shoulders, can answer all that for us. Thank
you, Marvin, and I think you're raising very pertinent questions. And also, my colleague here mentioned very good, the real issues on the ground. Yes, it is true, Africa has no one central bank and no monetary union, as we say. This is a process to have a monetary union. You start with a preferential trade area or free trade area, the customs union, the common market. So all those are processes. However, as we do that, and I was thinking about that, that's a process. There's trade going on. Farmers that want trade across the borders. From Ghana to Nigeria, from Nigeria to Cameroon, they want trade. And actually they are trading, but trading differently. So the role we have is to make sure that this trade is enhanced and increases. So how does PAPSS do it? PAPSS is a financial market infrastructure, a payment system with rules and participants and everyone.
So as a clarifier point there,
yes.
As you explain this, is PAPSS, because we have fintechs who are both here, present, and also at home watching, would PAPSS consider a competitor or would be an enabler to other fintechs who are involved in payments, for example? If you can include that within your answer, I think that'll probably help people understand a bit better.
No, that's what I was coming to. PAPSS has not come in place to replace any payment system or any regional or national payment system or replace fintechs or compete with them. We come to enable them. Fintechs today are yearning for an infrastructure with which they can run their products so quickly without having to invest into their infrastructure. PAPSS offers those rails for fintechs to develop products and run them off PAPSS. So we enable fintechs to do cross-border payments, to do cross-border business in terms of payments. Now, coming to what we mentioned that farmers or traders may need where there are no banks. Now, PAPSS welcomes or handles any client through any channel, whether it's a mobile channel, whether it's a banking channel, whether internet banking. So wherever they are, a payment can be sent through. In terms of trading commodities, there's two-way settlement cycle. The commodities move, the farmers bring them to the warehouse, and also they expect to receive money because they've sold or they've kept it into the warehouse. Now, PAPSS comes in to offer the payment instantly. So as a farmer is waiting for the 3 hours, PAPSS has been launched in the West African Monetary Zone with 6 central banks, 6 currencies. Now, our purpose is that the way we are structured today, without one central bank, without a common monetary union, with several currencies in the continent, these currencies can be able to trade as we move forward to creating whatever the central banks may decide to do. So the purpose of PAPSS is to enable this trade to happen. How do we do it? A client of any institution, whether a bank, whether a mobile money provider, they will go to use any channel they have and send through a payment. That payment goes through PAPSS, which is domiciled at the local central bank, and the central bank communicate to the central bank, and all these levels, KYCs are checked at the bank level, at the central bank level, at the PAPSS level. So it goes through that KYC compliance and all that. Now, we've done a pilot and we've proven that this payment actually can be effected and has been effected in 7 seconds, less than 10 seconds. The system is
7 seconds?
7.
So KYC cleared, payment made,
It's
7
all
seconds.
checked through.
Okay.
Now, this has been designed to have a maximum of 120 seconds, which is 2 minutes, and we answer the question of 3 hours. They want 3 hours, we're offering them 7 seconds, 10 seconds. So that will go very far in terms of gaining that trust. What a farmer wants is the payment instantly, and if they can get it in a couple of seconds, then they will leave you their commodities, and they go. So it's an ecosystem of solutions to be able to increase intra-African trade. It's not a one product that's going to do it. It's not 2 products. It's an ecosystem whereby the payment comes into as a linchpin of that activity, the whole trading activity across the borders.
Thank you for that. That's really, really helpful. This kind of goes to all 3 of you, but I definitely want here to give a bit more. Because when we talk about trade, we have financiers here, we have platforms that actually do distribution, we have payments, etc. But one of the key elements of this for cross-border trade is a freight forwarder that actually deals with customs clearance and bills of lading and that reality. Can you walk us through the reality of this for a small business? Because you hit the border, even if you have the free trade zone, if something comes in from another country, etc. Can you give us an example of what this is? How should people think about this from an ecosystem play? Because I think solving this problem can't be done by any one company. We need the financiers, we need the experts in commodities, we need the distribution players, payments, all of them to work together with freight forwarders.
Sure.
So I'd love you to talk about that more.
All right, awesome.
Please.
So I'll give you an example of a transaction for, let's say, a mid-scale. So we work with SMEs, cooperative farmers, we work with major guys as well, and we work with commercial farmers. So I'll give you an example of a cooperative farmers group moving cargo, let's say, from Kano, which is in northern Nigeria, and it's going to, let's say, Johannesburg or Cape Town in South Africa, right? So what would typically happen is these guys, first of all, have to consolidate this cargo into a warehouse. Now, if you understand the African system in terms of real estate, everything is pay per year, right? So these guys are, for example, only exporting or, trading 4 months in a year, and then they have to pay for a warehouse for a whole year.
Yeah.
Why does that happen? First question. Now, after consolidating this cargo in a warehouse, they have to basically reach out to as much as 8 different middlemen to basically try and get this cargo into containers and move them into the ports, okay? So to move, let's say 100, to make a booking to move cargo from Kano to South Africa, for example, the booking process typically in Nigeria right now takes as much as 10 to 14 days.
Wow.
Yeah, just to make a booking, because, I mean, he probably has first-hand understanding of that, because you're going to reach out to trucking companies, you're going to reach out to shipping lines, you're going to make phone calls to customs agents, you're going to reach out to the terminal, and everything to a large extent is still very much paper and pen and emails and phone calls, right? So the easiest way I describe it is 30 years ago when you're trying to buy a flight ticket, let's say to fly from DC to New York, what do? You go to the airport and you queue up and you're trying to make a ticket, and then basically after a couple of hours someone cuts your ticket, right? Now when you're trying to do something similar, you go on Expedia and you can book a ticket within 30 seconds, right? Well, in movement of cargo cross-border in Africa, it's still heavily very much send an email or make a phone call, right? And then you're emailing a shipping line, you're emailing a trucking company, or making a phone call to a trucking company. The booking process is fragmented, that's why it takes 10 to 14 days. Now, after that booking process, right, when you finally are able to actually make that process in, you have to pay everybody involved in that transaction via different means. USSD codes is still quite a significant thing in Africa, so you're doing USSD codes, right? You can do a bank transfer, or some people actually still say, cut me a check, right? So you're seeing all sorts of modes of payments for a single transaction, right? So there's a booking challenge, there's a payment challenge. Now the third major thing revolves around visibility of this cargo, right? In every 10 trucks moving, for example, in West Africa that we know of, only 20% of them have tracking systems on them. So you're having trucks carrying goods worth $100,000 on a single truck, and what you're having to do is rely on a driver who's earning $400 to say, hey, where's my cargo? All right, so what you're saying is, well, in every 10 that move, probably 2 or 3 go missing in transit, right? So there's a major issue around visibility on that. Now, the fourth and most important thing revolves around documentation, right? You spoke about bill of lading. For trade originating in Africa, to a large extent, most of these trades are what you call CFR, which means there's already, we spoke earlier about the trust issue, right? So when, for example, you're shipping a container load of hibiscus, right, to the US, 60% of these transactions are a case of when the container gets to the port of Galveston or something, we pay the trader based in Africa. So what you're having is a situation where there's a 6 to 8 weeks gap where this guy has his money stuck because the container is on a vessel.
Right.
Basically, right? And then he finally gets, let's say once the container goes, he gets his bill of lading, he has to send that bill of lading via DHL or something across to his buyer. 4 key issues: booking challenge, a visibility problem, a payment problem, and then a documentation. Now, those are key things we're focused in Oneport 365. What we've been able to do, first of all, is solve the issue around the booking problem, because we think that's the gateway to everything involved in the whole process, right? So we've been able to cut down that 10 to 14 days booking process into a 20 seconds booking process, right? So rather than having to talk to 8 to 10 different middlemen, right, and send emails and quotes and everything, we've built a platform whereby you can go on there and you can get rates instantly and make that booking and pay with a credit card. So you don't have to do a bank transfer, you don't have to do any of that. You can actually pay instantly on that system. So we solved the booking challenge, we solved the payment challenge, 100% visibility on shipments and cargo, and then what we're building right now is the ability for these guys to be able to print out their bill of ladings in their homes or in their offices, and they can send it down to their shippers. It's quite impressive. It's a major challenge when for so many of these guys. If you understand the challenges in Africa, they have to deal with the issue around security, they have to deal with the issue around power, they have to deal with the issue around infrastructure, and then having to go through all that whole process, and you have to get your cargo out of the country to a destination port, you have to deal with another bottleneck again. It's really frustrating. And for us to be able to remain highly competitive and become competitive in the global market in Africa, we need to be able to solve these challenges, because I can bet you what, it's not the same challenge you actually face in a market like Indonesia or Malaysia.
This is a very, very good point. We've been talking about all the challenges so far on why this has happened. But I do want us to remember that people are doing this because they are making money, often significant margins on this. And as we talk about it, I'd love to actually give Tesh a chance, and actually both of you actually a chance, to talk about the idea of the informal sector, right? Because you seem to have solved a bit of this for your clients in Nigeria. And Tesh, with your work in your markets, and what the margins are like, but also, what do informal players face as they try and scale their business, and the role in which, bringing to bear more sophisticated logistics and support for these informal traders. What does that do for the ecosystem and the margins that people can earn? Because obviously, if you're a fintech, you're venture-backed, obviously you need to show growth and margins. So without sharing anything confidential, just share a bit of why is this a good business case? Because we've been very focused on challenge, but I think it would be good to talk about, hey, if you're an investor or a bank or someone that wants to invest in this space, the margins are actually significant, and solving this gives you additional benefits. So I'm throwing a lot to both of you.
I have to go first. Yeah, so I think what's exciting is we talked about all these challenges, but
yes,
the reason we're all here is because we're solving, some of these challenges, very complex problems. But I hear like the solutions sound very simple because he's figured out how to lend in a few hours. He's figured out how to move product across borders. And what we do at MarketForce is we see ourselves as a facilitator of trade. So we're a two-sided marketplace. We work with the small businesses, informal merchants, enable them to order for inventory, get it delivered within 24 hours to their shop. So before they need to close their shop, go out and buy stock, that costs them time, costs them money. And then over and above that, they've really been underserved from a banking perspective. And us digitizing all these transactions enabled us to give them a credit score, and we do that using partners. So a lot of the work we do is leveraging on partners. So for the merchant, you're able to use the transaction patterns to extend working capital loans. And over and above that, on the trust, so we talked about trust being a negative thing, but if you think about an informal merchant, they're very trusted in their community.
Right.
And that gives us an opportunity to leverage on that trust they have to enable financial service providers to extend services to their communities through them, which is quite interesting. And if you look at on the other end of the spectrum, consumer brands are trying, especially smaller consumer brands, which are trying to penetrate the market. One of the big challenges, how do I manufacture stuff in Kenya and get it to Rwanda? So he's solving for that, and we're solving for, we build trust with the merchant because they're ordering from us, we deliver every day, and that way we're able to tell them, hey, look, there's this product that comes from Kenya that's super interesting, and they can sell it in their community again because they're trusted. So just seeing how all these parts of the ecosystem are coming together, and the private sector, building solutions and working together, partnering with, for example, we partner with embedded finance players. There's a lot of payments infrastructure being built that we leverage on.
Right.
So, just putting all these things together and solving African problems is pretty exciting.
Excellent. Zach, you want to throw something in, or give you some?
Give me a fresh one. He's good.
All right, fantastic. So, as a financier, I think what gets very interesting is to think about, I use COVID again because that was a huge shock to the system, right? And it also, borders closed, supply chains broke, etc. And I want to think about this from the perspective of, let's call it the hardness of the system. And as you think about as a lender and preparing for other shocks and thinking about how an ecosystem can support you, how do you approach the market? Because your clients go cross-border, your clients are local, they may shift and adapt very quickly. How do you manage the risk and think about that?
Manage the risk. We pray. Then when we're done with that, we get back to the drawing board. Well, it's a really important question because this year alone, in 2022, is going to be one of the harder years in Nigeria. It's because you're still coming out of some market fluctuation from COVID, but you have inflation. Oil prices are affecting Nigeria, and then it's an election year. So, election year. My Nigerians are laughing. So anyway, it's the importance of the question. But when we started, the first couple loans we did were in late 2019, so before COVID. And I remember we had one of our first borrowers who typically was buying rice from Togo and then selling it in Lagos to supermarkets. And then the borders got shut down. So this is before COVID, right? The borders got shut down and he needed extra cash because the local supplier was more expensive than where he was getting it from. So in order to fulfill the order that the supermarket gave him, so he didn't lose the business, right? In other words, just to stay alive as a business owner. Okay, and so we financed him, he bought the rice, he sold the rice, life went on, great. So that was before COVID. So like Nigerian business owners are used to it, right? Like COVID came, it was more stress. Nigerian business owners said, look, okay, more stress, and then work through it. I'll give you an example. We had one borrower who was selling travel tickets, like she was a travel agent. When COVID started, she was doing this, COVID started and travel obviously stopped pretty much. So imagine you're selling travel, like you're a travel agent, you're selling tickets on a plane, for planes, she had mostly corporate clients. So let's say she'd go to a business, say, hey, these are tickets for your staff to do their meetings, travel, et cetera, within the country, outside. COVID hits, your customers stop buying from you, what do you do? Well, she had a loan with us at the time, so like, we were very aware of the issue. It wasn't a large loan, this one was $700, I believe. She said, look, I can't pay the money, and we're financing her, right? So like, very much thinking about what's gonna happen with her. She said, don't worry, I'll handle it. So anyway, we figured out a recovery plan for her. A couple months later, she not only paid back the loan, this is March, April. In June, she was ready to apply for a new loan with a new business she started. So she like qualified for it. She was already operating. She started selling corporate face masks, like to those same clients that she was selling tickets to on planes.
And that's ability.
So
Yes.
she like, qualified for a new loan with her new business, like in just months. And we financed her, and she did well. And like, great, life went on. Like, okay, so COVID kind of changed things, but I think like we had a lot of what's the word? Like we have a lot of what's the word when you like resist? No?
Resilience.
Resilience.
Resilience, yes.
So we have a panel here.
So I think resilience is a key point of African business people generally. It's a very tough market, but it's a very good one.
Probably a blessing and a curse, right? You put up with so much shit.
Yeah.
Yeah, you get quite strong. What I do want to do, I know we have only 3 or 4 minutes, or maybe 2 minutes left. If there are any questions in the audience, I'm not sure, yeah, please.
Hi, Shola. My question specifically for Shola, actually. Yeah. And kind of curious what you think about IBM's trade lens, and then how maybe that kind of relates to your business, or how that kind of, maybe impacts what you're currently doing. Does that actually even relate to your business in a way?
Massively, actually. We've tried integrating with them, with a couple of other guys, not just TradeLens. There are 2 or 3 other guys we've actually tried integrating with. We think it's a fantastic product. It solves a lot of issues around visibility, right? Because to a large extent, like I mentioned earlier about a container moving typically, let's say, from Lagos to Port of Mombasa, right? You would typically have to transship in one location. So you have this guy who's shipped $100,000 worth of cargo, and he doesn't know where the container is. It's a massive problem to a large extent. He's not getting paid till that shipment actually gets there. So with TradeLens, that's a big plus for us. It's we're constantly talking to them. We're also working with a couple of other guys as well in terms of solving some more minor issues around visibility and all that. But yeah, that's a fantastic solution for us.
All right. Any other questions? I think that is it. Everyone, thank you for your time. Panelists, thank you all, and thank you for sharing about how there's a need for ecosystem to work together to solve this problem. But it's like together, we have all the pieces in place that should do some great things. Thanks, everybody.
Thank you all so much. Thank you. for taking us on a journey of trade through the continent. Thank you so much.